as a millennial, you work hard for your money. So why would you want to spend that hard-earned income helping pay someone else's mortgage? Hi, this is Todd Baker, your certified mortgage planner, and I specialize in helping people buy homes, refinance homes, and manage their mortgages. And I'd love to help you, and I want to share with you, I want you to join me in this video where I show you the powerful reasons to buy a home for wealth building, and also how to tackle the two primary concerns most first-time home buyers have, and that's affordability in the form of either cash to close or payment. So let's jump right in. I want to show you some powerful information. So first off, I want to start by saying we're going to assume a rent of $2,100 plus of $20 a month for rental insurance. And we're going to assume that the rent goes up 3% per year due to cost of living increases. And I'm also going to show you 4 different ways to buy a home at $300,000. One is you pay full price using down payment assistance programs. And you can get down payment assistance programs up to 5% of the loan amount to help cover your down payment and cash to close. It does not cover everything. However, it is very helpful. The interest rates are a little bit higher on those programs, but you can definitely get some help. So we're going to look at down payment assistance paying full price. We're also going to look at what if you're able to use that down payment but then negotiate a lower price on top of that. So you can get, say, a 3% seller concession, meaning the seller lowers the price by 3% to $291. The next one, lower cash to close, meaning we keep the sales price at $390, but we use that $9,000 seller concession to pay your closing cost. Or the last one, we keep it at $300,000 sales price, but we use a $300 concession to do a buy down. Now this payment reduction, payment subsidy program, this option right here does not have with it the ability to couple up with a down payment program. So I'll go over that in just a minute. All right, so what's that look like? So if you were to go use a down payment assistance program, your payment with taxes and insurance and everything would be $2,724. And so the first thing is you say, well, that means, man, I'm paying $2,200 in rent. I don't want to pay $2,700 to buy a house. Yes, but I'm going to show you something very powerful in a minute. If you lower the price, if you use the down payment system to get a lower price, your payment does go down. This is what most people will tell you, like your mom, your dad, your grandparents, your uncle, your friends, your coworkers. They'll all tell you, yeah, get a good deal on price. And that's okay. It's a better price, but it doesn't change your payment much. And if you look right here, your cash to close, even with the down payment assistance, and this option is $16,000, and this option is only $16,100, it goes to $15,900. It doesn't change much at all. If you were to lower the cash to close, you'd have the payment would be the same as option 1, but look what happens if you're out of pocket. That really solves for if you have limited cash. Be a couple of down payment assistance with a negotiated seller's concession to get your cash to close down to about $7,132. The last one, we have cash to close at about $20,000. When I say cash to close, just so you know, that means your down payment and all of the closing costs are associated with the loan. And the closing costs are mostly, they're not lender fees, they're title, escrow. There are some lender fees, but it's mostly third-party charges. You have to set up an escrow account for taxes and insurance. That's beyond the scope of this video. This video is purposely to show you affordability and wealth creation. So that being said, these are your cash to close options, and these are your payment options. Now look what happens to this one. You can get a payment as low as $2,202. That's a big, big deal right there. It's not permanent. It's for 1 year, and then it goes up the second year, then the third year it goes up to this amount. But interest rates are expected to drop 2 years from now, down into the mid-4s. So this would allow you to buy now without having a huge buyer frenzy going on and refinance later. So those are the options. Now let's start going a little bit deeper. So because a lot of people think, I don't want to mess with a 30-year note. Well, remember, you could sell the house. You don't have to keep the house forever. Or you think, I don't want to have that payment increase. But when you buy a house at a 15% tax bracket, you get a tax benefit, and you're paying principal each and every month. Each and every month you're paying principal. So when you compare apples to apples, your net payment is about the same as rent, actually. In this case, on the last one, it's a little bit lower. So that's the big deal. Now, what goes into the payment, just so you understand, is you have a principal and interest payment, taxes, insurance and what's called a mortgage insurance, which is a small lender's insurance premium, that with some loans actually goes away eventually. So that's what goes into the payment. Now, this is where the rubber meets the road. When you scroll down, look at how much rent you'll pay over the next 5 years. This is a shocking amount. You will pay in rent $135,000. So let me repeat that. You will pay in rent $135,000 that goes out the door nowhere except to help somebody else. Okay? If you buy a house, you have your own place. You have the security of knowing it's your own place. You can decorate it the way you want. You can improve it the way you want. And check this out. After the same 5 years, you're going to have anywhere from $18,000 to $25,000 worth of equity. And that assumes a very small level of appreciation. This then becomes an asset that you can couple into a few things. So the average person will live in a house 5 years. At the end of 5 years or 6 or 7, whatever it is, what will happen is you can take that equity. By the way, that equity is probably going to be a lot bigger. We have a housing shortage still in Texas. But you take that equity and you can sell the house, and we roll that into a new purchase so you can afford more house because you have a larger down payment. And for many people, what they do is this. They rent the house out, and then they go buy another house using a 5% down program, and they do it again. And then you now have two real estate assets, one cash flow, a positive cash flow, building wealth for you that way, and a new one you're living in. So there's a couple strategies when you go to sell the house. Now, long term, and this is where it's the game changer. Okay? Long-term wealth, look at the graph, move this over a little bit so you can see, $325,000 to $350,000 worth of net worth. That's why homeowners are way wealthier than renters. Have you noticed as you're growing up, like for me, my generation, we bought houses in our late 20s. And I bought it when I was 27. And the thing about it is like all my friends were renters. But once we became homeowners, so many things changed. The house creates wealth, but your mindset changed. You learn how to become a better budgeter. You start to get interested in financial planning. As you start to see your asset gain, your whole mindset starts to shift. And that's true of any generation. And that'll be true of your generation as a millennial as well. So if you're seeing this video, it was shared to you by a real estate agent. Reach out to them so they can connect us. The time to start is now. You want to do a one-on-one planning session, I will do that with you. In this, by the way, even if you're thinking, I'm not going to buy for 2 years, guess what? You need to do a plan now. You need to do a credit check. Credit that you have access to, a Credit Karma and all the apps, is not the same as a mortgage FICO score. And it doesn't hurt to pull your credit. So we pull credit, we address your liabilities, your score, we develop a budget, a sustainable housing payment, we look at the programs that are available for you, we set up some different options, and then whatever action steps you need to take to get ready, you'll be working on the exact right things to do in order to buy a house. So I'm looking forward to helping you. Hope you found this helpful, and I hope you see the power of routing a monthly payment that you have to make for shelter into an asset that can transform your life. Thanks so much, and I look forward to meeting you.